how to reduce withholding taxes on the sale of a U.S. property. Hi, my name is Allan Madan from Madan Chartered Accountant. In this video, I will explain how Canadian sellers can reduce withholding taxes on the sale of a U.S. property. If you are selling or thinking about selling your U.S. real estate, then this video is for you. When a non-resident of the U.S. sells U.S. real estate, the title company must hold back 15% of the sales proceeds. This is in accordance with the Foreign Investment in Real Property Tax Act, FIRPTA. However, if the buyer intends to use the property as a personal residence and the selling price is below $300,000, then no taxes will be withheld from the sale. Let's take the example of Buston Bieber, a Canadian tax resident who is selling his vacation property in Orlando, Florida for $1 million. A withholding tax of 15% or $150,000 will apply to the sale. Buston purchased the property in 2007 for $900,000. Buston would like to reduce the taxes to be withheld. He can do this by completing Form 8288B, Application for a Withholding Certificate. How to complete Form 8288B. Part 1. Seller's Information. Enter your name and tax identification number. If you do not have a U.S. tax identification number, then you must attach Form W-7, Application for an Individual Taxpayer Identification Number, to Form 8288B. Enter your home address in Canada. Part 2. Buyer's Information. Enter the buyer's name, identification number, and address. Part 3. Applicant. Check the box for transferor. The transferor is the seller and the applicant. Parts 4 and 5. Title company's information. Enter the name, tax identification number, and address of the title company. The title company is responsible for withholding taxes from the sales proceeds. In addition, the title company should receive the withholding certificate from the IRS. Part 6. Details of the sale. Enter the closing date and selling price. Check the boxes for real property and personal. Report the adjusted cost basis. This is the purchase price plus the cost of improvements made to the property and closing costs paid when you originally bought the property. Report the address of the property being sold. Check No for filing returns and payment of taxes. Since this is Buston's personal property, he was not required to file U.S. tax returns, nor was he required to pay U.S. income taxes. Part 7. Reason for issuing withholding certificate. You have to provide a valid reason why the IRS should issue a withholding certificate to you. In this case, check box 7B because Buston's tax liability from the sale is less than the taxes to be withheld. Buston's tax liability is $8,139. You can use a personal tax calculator to estimate the U.S. income taxes payable arising from the sale of your property. However, the taxes to be withheld are $150,000 or 15% of $1 million, which is the selling price. Since the estimated income tax liability of $8,139 is less than the taxes to be withheld, Buston has a valid reason to request the IRS to issue a withholding certificate to him. Once the withholding certificate is issued by the IRS and provided to the title company will only withhold the estimated income tax of $8,139 and remit this amount to the IRS. The rest of the funds will be released to Bustin. That is $991,861, or $1 million less $8,139. Part 8. Unpaid taxes. Bustin does not have any unpaid taxes, so he would check no. Part 9. Additional information. Since this application is for an individual taxpayer instead of corporation, Bustin would check no. Final step. Sign and date the form at the bottom of the page in original ink. Mail the signed Form 8288B to the IRS and attach these supporting documents to it: original purchase agreement and closing statement, details of improvements made, sales agreement and closing statement. For more tax tips, please click on the subscribe button below and visit our website. Feel free to follow us on Twitter, Facebook, Instagram, and Google+. Don't forget to like, comment, and subscribe to our YouTube channel. See you soon, and thanks for watching.